You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, first day of July, 2025. Can you imagine half of 2025 has gone bye-bye? We're now officially into the second half of the year. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. So to get in there, you gotta be one of our traders or taking your 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us at the top of the hour, he'll walk you through the process, step by step. We'll get your indicators up and indicating today. Your trial will officially begin tomorrow, but don't worry, the weekend doesn't count against you, so you'll still get 5 consecutive trading days on the trial, and there's no credit card required. When you take the trial, you're not just getting access to the live training room. What we do for 5 consecutive trading days, we treat you just like you were already a member, a passport holder, and we give you access to everything, with one exception, and that's the members only workshop on Thursday nights at 8 p.m. Eastern. From the alerts, to the indicators, to the live training room, to the one-on-one mentoring. In fact, you could even talk to our traders in our Telegram discussion group. Not a lot of places let you do that, but we do. Because we know if you talk to our traders, the ones who came to us after, in many cases, years and tens of thousands of dollars trying to learn how to trade, they're finally profitable consistently. So yes, unlike other places, we want you to talk to our traders. You don't have to take it from us. Take it from them. Okay? Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for this broadcast, the noon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go here to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there'll be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have instant access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop. This time of year, maybe on vacation, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. The good news is you can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. We're celebrating our 20-year anniversary. But you don't have to remember all that. Just remember youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to our little corner of the world, it's a great way to get to know who we really are. In fact, thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to. But it is a great resource to have at your fingertips. And it lets you know we've been around a minute or two. And again, it shows you how we've evolved over the years. We've worked very hard for a very long time to make learning to trade as simple as it can possibly be. youtube.com/CFRN. This is our schedule for each afternoon broadcast. At the top of the hour, Michael will join us and give us a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform. But we'll start out where we always do, with our daily devotional. Now, the topic we're in day 5 of 10. The Holy Hustle, embracing a work hard, rest well life. Today's scripture is Ruth 2, verses 5 through 7. And I'll be sharing it from the Message translation. Boaz asked his young servant, who was foreman over the farmhands, "Who is this young woman? Where did she come from?" The foreman said, "Why, that's the Moabite girl, the one who came with Naomi from the country of Moab. She asked permission. 'Let me glean,' she said, 'and gather among the sheaves following after your harvesters.' She's been at it steady ever since, from early morning until now, without so much as a break." Ruth 2, verses 5 through 7. So the Holy Hustle really isn't anything new, is it? Now, I had read Ruth's story in the Bible dozens of times before one Sunday I noticed something unexpected. Ruth didn't just do the bare minimum to get by. She hustled. She worked hard, respectfully, resting when needed, and finishing the work that was before her. She worked until evening, gathering 26 quarts of barley to support her family. Ruth showed up to work, and God worked out a plan through her life that would lead to her marriage to Boaz and her place in the lineage of Jesus. That is holy hustle. Ruth wasn't motivated by popularity or recognition. Gathering grain is hard, back-breaking work. It wasn't fancy or famous or impressive. It was humbling. But Ruth's work had meaning and purpose. And I believe ours does too. What if Ruth had looked around the small home she shared with Naomi and focused more on what they lacked than on what she could provide? What if Ruth had gone out to seek work that would make her feel important instead of doing the work that would put her right where God wanted her? She may have missed the harvest entirely, as well as the blessings God wanted to give her as He redeemed her family. It can be hard to go out and do the hard work God has called us to do. Maybe you've been asked to serve in a workplace that doesn't honor God, and you feel like the stranger in a strange land. Or maybe God has brought you to a new place, and your dreams of doing impressive work that would bring recognition and fame have been replaced with a call to serve in a much smaller way. Maybe you've been serving faithfully in a role that you love, but feel frustrated that you don't see the fruit of your labor. When we stop striving and start serving, we begin to trust God to harvest what we're faithfully planting. The kindness you bring to your workplace may be the very thing that draws someone closer to God. The love you show to others in the small, unseen, faithful places may be the very stepping stone God will use to bring people closer to Himself. And those seeds you plant in faith may one day, generations after you've been gone from this earth, be the catalyst to a beautiful gift that God wants to share with the world. Quite a responsibility, isn't it? Let's pray. Heavenly Father, thank you for seeing the faithfulness of those who serve humbly and diligently like Ruth. Help us to work with a willing heart and trust that you notice every effort. May our lives reflect integrity and devotion, bringing honor to you in everything we do. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Tuesday. Well, Trump's mega bill squeaks through the Senate, but the House can still reject changes. This has been quite the votorama. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. And yes, we have the dreaded mixed markets. The Dow's up 473 points, a little over 1%. But the Nasdaq's down 166 points, almost 1%. S&P 500 is down 4 points, but the Russell 2000, our man in the street, is up 23 points, which is a little over 1%. Now, when I say mixed markets, what I'm talking about is the four major indices that I just gave you the numbers on. As futures traders, we like to see them all for red or all for green. We don't care which color, because as the futures trader, you can be long, short, and long again all in the same hour if that's what the chart in front of you is telling you to do. But when the markets are divided as they are today, the Dow and the Russell in the green, solidly. But the Nasdaq and the S&P in the red, not by a lot, but in the red nonetheless. You tend to get less follow through on your trades than you do when they're all the same color. And by the time this broadcast is over, who knows? They just might be all the same color. In the commodity basket, crude oil is up 45 cents. trading 65.57 last. Gold up $44.10, trading 33.5210 last. That's a gain of over 1.25%. Silver up 28 cents, trading 36.29 last. In the Asian markets at the close, the Nikkei dropped 501 points, 1.25%. The Shanghai rose 13. The Hang Seng fell 211, which is almost 1%. And in the European markets at the close, FTSE up 24. The DAX down 236, 1%. The CAC down 3. So we had a mixed day in Asia. It was a mixed day for the UK. And it is a mixed Radio Tuesday here in the US of A. Let's take a look at the global news. Wildfires are scorching parts of southern Europe as a lingering heat wave bakes swaths of the continent, prompting health alerts and evacuations. Nearly 200 French schools were fully or partially closed yesterday, and 17 Italian cities are under the country's highest heat alert as of this writing. Portugal and Spain saw record June temperatures near 115 degrees Fahrenheit over the weekend. The extreme heat expected to persist into midweek is driven by a heat dome stretching from southwestern Europe to Turkey. Scientists say climate change contributes to the frequency and intensity of these high-pressure systems, which trap hot air like a lid on a pot. Now, some of you are old enough to remember that there was as much fear as there is today about climate change. Well, they did call it global warming, but then they switched it to climate change. But not too very long ago, scientists were talking about that we might enter another ice age. You know, the God who created the heavens and the earth, just maybe he knew what he was doing, and what we're seeing is what he needed to make things work. The hot, dry air and strong winds in western Turkey have sparked wildfires that displaced over 50,000 people and temporarily shut down an international airport. Smaller fires also ignited in France's Corbières region, while Greece remains on high alert after battling blazes near Athens last week. Central and Northern Europe are also sweltering, with Britain recording its hottest opening day in Wimbledon history yesterday. Well, happy birthday, Dalai Lama. Celebrations for the Dalai Lama's 90th birthday kicked off yesterday, launching days of festivities honoring the Tibetan Buddhism's spiritual leader. The ceremonies will culminate in an announcement tomorrow of a pathway for identifying the Dalai Lama's successor, his strongest indication yet that the centuries-old tradition will not die with him. Now, if you're a Buddhist, your supreme leader is the Dalai Lama. And if you're in Iran, your supreme leader is the Ayatollah. Could there be two more different people on planet Earth? One has always worked for peace. The other is just filled with hate. Death to America, death to Israel. The 14th Dalai Lama was born Tenzin Gyatso in 1935. He was selected as the reincarnation of the previous Dalai Lama at 2 years old when a senior monk visited his home and Gyatso correctly identified objects belonging to his predecessor. The process of identifying a Dalai Lama historically begins after one's death, but has recently become politicized. China, which annexed Tibet in 1950, contends it alone will name high-ranking monks, disappearing a 6-year-old boy named to the clergy in 1995. And let me ask, do you suffer from inflammation? A new study published yesterday suggests low-grade chronic inflammation may be tied to environmental factors in industrialized countries, challenging the long-held belief that the biological process known as inflammaging is a universal part of growing old. Researchers analyzed health data from 4 populations: 2 industrialized, Italy and Singapore, and 2 non-industrialized, indigenous communities in the Bolivian Amazon and Malaysia. The study found that while inflammation levels increased with age in industrialized societies, the pattern was absent in the non-industrialized groups, where inflammation appeared mostly linked to short-term infections rather than chronic age-related diseases. The findings suggest the persistent inflammation seen in wealthier nations may be more influenced by lifestyle and environmental factors, such as diet, pollution, and levels of physical activity, rather than just by aging itself. The study also highlights I just lost my article. Say it ain't so, Joe. Hang on. Let's just move on to the Wall Street news. Job openings unexpectedly rose in May to hit the highest level since November of 2024. That's according to government data released today. The report comes as investors closely watch for any signs of slowing in the labor market amid a debate over when the Federal Reserve could cut interest rates again. New data from the Bureau of Labor Statistics this morning showed 7.76 million jobs open at the end of May, an increase from the 7.39 million seen the month prior. The April figure was revised higher by 4,000 openings. Economists surveyed by Bloomberg had expected today's report to show 7.3 million openings in May, but we got 7.76 million. So if you're looking for a job, it's never been a better time. Stocks were mixed this morning as Wall Street watched for progress on trade talks and on President Trump's massive budget bill in the Senate. We'll have more on that. Tesla stock sank over 7% today as the feud between CEO Elon Musk and President Trump reignited overnight, with the president once again threatening to cut government subsidies across Elon Musk businesses, including Tesla and SpaceX. Now, I'm just going to give you my opinion. Elon's a big crybaby. When he doesn't get his way, he stamps his little feet. I think his son X is more mature than Elon himself. First, Elon went on Saturday Night Live, supposedly to promote Dogecoin. He only made one comment and it wasn't flattering. And Dogecoin plummeted that Saturday night. I was watching it live in real time. Now that he can't get what he wants from the president and from the government, well, he's on a little tirade, a temper tantrum. Elon may get more subsidy than any human being in history by far, and without subsidies, Elon would probably have to close up shop and head back home to South Africa. Now, that's a comment from Trump on Truth Social yesterday. No more rocket launches, satellites, or electric car production, and our country would save a fortune, Trump added. Perhaps we should have Doge take a good hard look at this. Big money to be saved. Tesla's down about $15 or 5% on the session right now. I've had it with this guy. He may be the richest man in the world and arguably one of the smartest. But when it comes to common sense, nobody's home. From Bloomberg, Senate Majority Leader John Thune said his chamber will soon vote on passage of President Donald Trump's tax and spending bill after securing enough support to pass the legislation. I believe we do have enough votes to pass the bill, Thune said. But like I've said, I'm of Scandinavian heritage, so I've always been a realist, so we'll see what happens. The Senate worked through the night on Trump's $3.3 trillion tax and spending package, with Republican leaders still negotiating this morning with key GOP holdouts. I'd love to see those guys try to get reelected. Thune did not specify what changes were made to the bill to convince holdouts to support the measure. Alaska Republican Lisa Murkowski, a moderate concerned about Medicaid and green energy cuts, appeared to be the central focus of leaders' attention early Tuesday. There are no cuts to Medicaid. How many times do I have to say this? The waste, fraud, and abuse, people who are drawing Medicaid from different states at the same time, people who are in this country illegally and shouldn't even be receiving Medicaid, that's all that's being cut. But apparently, some of our congressmen want to see the waste, fraud, and abuse continue. I wonder why. When you put your hand in a man's pocket, you get his attention. Through the negotiations in recent days, there have been 8 major Republican holdouts. Thune can afford to lose only 3 senators and still pass the measure. 2, Rand Paul of Kentucky, done with him, and Tom Tillis of North Carolina, done with him, have said they are solidly against it, leaving very little room for error as the South Dakota Republican tries to get to 50 votes on the package. Now, Murkowski, whose efforts to protect her home state from Medicaid cuts. Now, people who are legally receiving Medicaid are not going to see any cuts. Only the people who are double dipping and shouldn't be getting it at all. Well, her efforts were rejected by the Senate Rules Keeper. Had meetings both on and off the Senate floor throughout the night. She would not divulge early this morning whether she would support the bill or not. Oh, just take your toys and go home. President Trump's team is no longer aiming for big trade deals with many countries. This is according to a report in the Financial Times. Instead, they're trying to make smaller, quick agreements before July 9th, when Trump plans to bring back his toughest tariffs. These mini deals would help countries avoid those harsh levies. But partners would still face existing tariffs while talks continue. Talks continue to take place, and Trump is still threatening a new tariff on key sectors like cars, steel, and aluminum. Get with the program, guys. Now, this is going to surprise you. Federal Reserve Chair Jerome Powell this morning, he was speaking somewhere. He didn't rule out an interest rate reduction this month. We got an FOMC this month, and he's not ruling it out, but agreed that the central bank would have cut rates by now if not for the tariffs introduced by the Trump administration. All the tariffs have done is brought in trillions of dollars, hundreds of billions at least. Powell said on a panel at a European Central Bank Monetary Policy Conference in Portugal, "I wouldn't take any meeting off the table or put it directly on the table. It's going to depend on how the data evolves." Powell noted a solid majority of the Fed's interest rate setting committee do expect that it will become appropriate later this year to begin to lower rates again, explicitly mentioning the remaining 4 meetings of the year. That includes the FOMC on July 29th and 30th. He was also asked by the panel moderator if the U.S. Central Bank would have cut more by now if not for the tariffs. The Fed lowered rates by a full percentage point in 2024, but has held rates steady so far in 2025. Come on, Jerome. You're holding back the golden age. Lowering the interest rates, oh my goodness, it would do so much for so many, including our country. Copper has risen to a 3-month high, boosted by buying towards the close of trading in China on signs factory activity is recovering in the world's second largest economy. Go copper. And from Bloomberg, the European Union is willing to accept a trade agreement with the U.S. that includes a 10% universal tariff on many of the bloc's exports, but wants the U.S. to commit to lower rates than that on key sectors such as pharmaceuticals, alcohol, semiconductors, and commercial aircraft. The EU is also pushing the U.S. for quotas and exemptions to effectively lower Washington's 25% tariff on automobiles and car parts, as well as its 50% tariff on steel and aluminum, according to people familiar with the matter. You know, go to Europe and try to find a Ford F-150, the most popular truck in the world. You won't see any. But go to any big city in America, boy, you'll see BMWs and Mercedes. They're all over the place. Porsche. It's time for this highway robbery. See what I did then? To be done. And last, from Wall Street, Federal Reserve Chair Jerome Powell stuck to his position that the central bank will keep its key rate on hold while it waits to see how President Donald Trump's tariffs affect the economy. But he said something a little different this morning. Despite the steady stream of criticism from the White House, which wants lower borrowing costs. As long as the economy is in solid shape, we think the prudent thing to do is wait and see what those effects might be, Powell said. Okay, Jerome. If our economy does collapse, which I don't believe it's going to, or the recession, the Republican recession, the blood's gonna be on your hands, Jerome. Nobody else's. Yours. All right, local news. Hasn't changed since yesterday. As you know, if you follow us, Sunday night we published Logic 247 alert number 20,000. Over the last 361 weeks, we have issued 20,000 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. So since the market opened Sunday night, I've only issued 2 alerts, and we got to 19,998. I think it was last Wednesday. So I didn't do anything Thursday, I didn't do anything Friday. But Sunday night I saw the opportunity, and boom. What a way to hit the 20,000 round number. 2 alerts, 2 actionable alerts, 2 thumbs up, 0% stopped out. Now the logic alerts, they had an entry price, an initial target, additional targets, and a final trade to target. Of course, you're able to trade them, but the real purpose was to teach you how to read a chart. If you're going to trade for a living, you got to be able to read a chart. Nobody knows what's going to happen next in the market, but once you learn the language of the market, there's no words, sentences, paragraphs, or punctuation. It's just candlesticks and the ebb and flow of the market. If you're new to trading, it probably looks like chaos. Who can make sense of this? Well, we do, each and every day. You can learn too. But you got to show up, got to do the work, got to ask the questions, you got to follow the rules. It's pretty basic. Now, 361 weeks, that's a very long time. I think we can all agree on that. But many years before we had a Logic 247, we had the concierge trade alerts. And they're different. The logic alerts came out around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But the concierge trade alerts, or the CTAs, they're different. Number one, they don't come out around the clock. Typically, they're posted 5 minutes ahead of the Globex Open. Sunday night, I got them out 10 minutes ahead of the Open. But most nights, they come out at 5:55 p.m. Eastern. We all know today's the Tuesday session, but the Tuesday session began last night at 6 p.m. Eastern when the Globex markets opened. So last night, and I posted this in the discussion group, that I was out and about and I wouldn't be able to get the CTAs out ahead of the open, but I did manage to get them out exactly 1 hour after the open. So what that means is all of our traders and all of our trial members had all of these targets 1 hour after the market opened last night. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So as we go through the individual markets chart by chart, and you see these targets, just remember they were published 1 hour after the market opened. Okay? That means now we can go to the charts. And I can show you exactly what I'm talking about. Okay. So let's start where we always do, with the bellwether, the S&P 500 Emini futures. Now, I want you to look at this step line here, the black step line. We still call it the step line. It used to look like a little set of stairs, but I just decided to straighten it out and just make it a regular line instead of the step line. But we called it the step line for so many years. Do you see how it's starting to lean to the right? It's directly above blue and climbing. Once the step line crosses from the left side to the right side of blue and climbing, we almost always get a retracement back to the BBC. That's the green line. BBC simply stands for bull, bear, cross. When price crosses below the green line like it did February 21st, we're bearish and expect lower prices. When price crosses above the green line as it did on April 24th, we're bullish and expect higher prices. Pretty simple. Now, no matter what methodology or strategy you use, price always reverts to the mean. It's just how markets work. In our case, the mean is green and we call it the BBC. Now, the way the market moves is in legs. Leg, retracement, leg, retracement, leg, retracement, leg, retracement. The pull back to the BBC holds more often than it doesn't. Here, 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 here. And then once we traded above the BBC, the pullback held, the pullback held, the pullback held, and the pullback held, and here we are. We've come right up to that area where we expected resistance. We were able to identify that months ago. That's why it's important you learn how to read the chart, because you'll never know with certainty what's going to happen next in the market. But you can know with a great degree of certainty what the next high probability move is. That's how out of 20,000 logic alerts, we were able to have a record where 20% or less got stopped out on a weekly basis. It's actually much less, but God loves a humble man, so I'm not going to pound my chest, I'm just going to be thankful. Now we got an inside day going on. That means we haven't taken out yesterday's low and we haven't taken out yesterday's high. But I think we just may be on the cusp of the pullback to the BBC. Now the pullback holds more often than not, but we don't know that when this pullback comes, and it will because price always reverts to the mean, the question becomes, will it hold or not? Whether it does or doesn't, we'll have trade opportunities. Now, one last thing about the daily chart. Whether you trade futures, stocks, crypto, Forex, ETFs, institutional traders, the ones who actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, stick charts, and range charts. Has everything to do with account size. So I challenge you to spend 2 minutes with the daily chart of whatever you're about to trade before you drop to your smaller time frames and start trading. Number one, it gives you a free look over the shoulder of the deep pockets that move price. And most days, you get a real clear picture. And even this is a clear picture. It's called indecision. And it shows that we're likely to retrace back to the BBC, possibly lower. Not saying we can't go higher, because we can, of course. But I believe we're poised for another retracement. Now, not only do you get a free look over the shoulder of the deep pockets, but you're able to identify where to expect resistance. Right here where we had a bearish cross, that's when the red line gets below the green line. We knew months in advance that when price finally got back to this area, it would be resistance. And it was. Look at that little tiny doji we had on the day that we hit that spot. But the following day, the market managed to power through. But the resistance we expected for months, it held true. Okay, all alerts, Logic 247 or Concierge Trade Alerts, they're all created on the 30-minute chart. Nothing magic about 30 minutes, it's just the time frame I chose years ago, and I've stuck with it. If it's not broke, leave it alone. The vertical lines that you see separate today, Tuesday, from Monday. Back over here is Friday. And if I went back further, it would be Thursday. And these are this week's current weekly trading zones. On yesterday's broadcast, I had last week's zones because the alerts that go out Sunday night are based on the previous week's zones. The zones are published Monday morning at 6:15 a.m. Eastern. We've published the zones for our members for the last 15 and a half years. When price rallies up to a zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support until proven otherwise. Once these zones are published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. So last night, this was the opening 30-minute candle. That's the second 30-minute candle. So it was at the open of this candle that the targets were published. Again, I typically get them out 5 minutes ahead of the open, but I was running a little late last night. So everybody had the targets on the the third candle. It's so tiny you can barely see it. It's hiding right there. You're above the BBC, so you expect higher prices. And we got them. Didn't quite make it all the way to the long target, but just this candle alone right here. It opened at 62.50 and ran up to 62.55. So 5 points in that one candle. You only need 2 points to get your goal for the day. So the market found resistance here, which just happens to be the bottom of this window. Now we drew this window of opportunity in yesterday, and it filled before the market closed yesterday. Now that window was 62.57 up to 62.61. That's 4 points. You only need 2 points to get your goal for the day. Also, we drew this window yesterday, and it filled, and it filled, and it filled again 3 times. Now this morning, about 5:30 a.m. Eastern, I got started drawing windows, and I drew in this long window, and all of this is published in the Telegram discussion group, and they're all time-stamped. Okay, so here's the long window I drew in the short window. Now the short window has filled once, twice. The long window, that window was 62.52 up to 62.55. This high here was 62.53. So didn't make it to the top of the window. This one got up to 53.75. So there was an opportunity to take some profit, but if the worst thing in the world is you got stopped out, well, that's just a part of trading. But these filled quite nicely. So when we failed to make it to the long target, Price dropped back to the VVC. Consolidated, but we had red and falling, and that pushed it down to the zone, where we consolidated for quite a few hours. One of three things happens when price encounters a weekly trading zone. 70% of the time it's consolidation, just like this. 20% of the time it's rejection, just like this. This was a green candle all the way up to the zone at the tick. And then by the time the 30-minute candle closed, we were way down here. Pretty cool, huh? So the short windows again, filled twice, and not so much on the long. That's life. Now you see all these wicks sticking to the upside? Now we've got blue and climbing on the 30-minute chart. But these wicks, along with what I see on the daily chart, tell me we're due for a retracement. So we'll see what happens. The Dow just went wild. Now we drew this window, and this window yesterday. We also drew this one, but it never filled. So this was a long window. It filled. And then it filled again. The short window that we drew yesterday filled and filled again. Now the short window I drew this morning did not fill. Price came right down to the top of the window. When you approach a window of opportunity, that's when you want to grab your range chart and make sure you have a proper setup per the rules you're taught every morning in the live training room. The long window that I drew this morning at about 5:30 Eastern, we fill that thing nicely, and we powered through the zone. And now notice how the black step line is starting to hook to the right. Can you see it? It's leaning to the right. Once that thing crosses to the right side of blue and climbing, see on the way up, the black line is definitely on the left side of the blue line. But once it crosses over, you should expect a retracement back to the BBC. Price always reverts to the mean. It just becomes a question then of, is it going to hold or not? Let's go to the Russell. The Russell. Yesterday we drew this window and it filled. This morning I drew this window based off yesterday's price action, and that filled. And I drew this short window which went all the way back. This is Tuesday, this is Monday, this is Friday, okay? People always ask me, how far left do I have to look? As far as you need to. So using Friday's price action, I was able to draw this window here. 2182 down to 2180, 2 points. That's a little more than 2 points, but we'll call it 2 points. So we filled it, and then we took off and we filled the long target, or the long window. So we hit the short target, we hit the long target. Now notice, this was the opening candle. This is when the alerts came out. So we ran up to the BBC and the pullback held. Sent price back down to the zone, which held as support, just like it did yesterday when it filled that window. Okay. So support will always send the market looking for resistance. Pullback held. Resistance will send the market looking for support, which it found at the zone. And then this thing just went nuts. all the way up to 2238.80, high of the session for the Russell. And also this long window that we drew yesterday, that filled this morning. What I'm trying to get across to you guys is you can plan your work hours, even days in advance. And once you identify a valid window of opportunity, it remains valid until triggered. Whether it takes a day, a week, a month, however long it takes, it's still valid. Nature abhors a vacuum, so does the market. The NQ. Okay. So on this candle, the CTA targets came out. And then this pullback to the VBC held, and it sent us right up to the long target. Once we hit resistance, market's going to go look for support, which it found at the weekly trading zone. Pull back to the BVC, it held, the pullback held, the pullback held, and then we dropped through the short target and filled the window I drew this morning based off yesterday's price action. That was around 5:30 this morning, Eastern, when I drew the window. It filled during the 8 o'clock hour, the 8 o'clock 30-minute candle. So the market found support. Okay, why? See the bullish cross? When you have a bullish cross, that's when the blue line gets above the green line. That leads to an extended move. The first time price revisits that area will almost always be good support. And it was. Sent us back up to the BVC and the zone, resistance times 2. Resistance will send the market looking for support, which it found at the zone. Support has now sent the market looking for resistance, which it found at the zone. Kind of getting the idea that the zones are pretty important. That's why I've published them for 15 and a half years. Okay, crude oil. I drew the window this morning based off yesterday's price action. It filled, and it filled. And as we came down to the top of the long target, that acted as support. That kept bouncing us back up to the zone. We overshot the zone by a little bit, and here we sit right here. We're above the BBC. We're at the zone. We got a doji going on. But with these wicks, I think we're headed lower, even though we're above the BBC. Now we got to respect the fact that we're above the BBC right now, so we anticipate higher prices. Okay, but I think in the bigger picture, we're going to see a drop unless that bill gets passed. And if that vote were to come through today, then markets are going to go crazy. We'll cover gold and the other markets when I come back. Right now, Michael's going to give us a recap of what happened in the live training room this morning, then do some live trading on the TradingView platform.
Okay.
And again, I'll come back. I will finish the recap I was doing and wrap things up with our good word for the day.
Okay.
If you're ready.
I'm sending you a message right now.
You're sending me a message?
Yeah. And I scheduled a meeting using this room. I was just sending you a reminder. At 2 o'clock. No big deal. It's just with some people, this room doing the remote stuff works a lot better.
Yeah, okay. So what are you saying? You need me to be done by 2?
That's all. That's all.
No
You can be done by 2.
I'll be
That'd
done
be
by
great.
2.
Excellent.
Okay, but then I have, let's see. I think I have a mentoring session at 4 p.m. Eastern. But you'll be done with the big room by then.
Yeah, I'll be done by then.
Okay.
Who's that with? Is that with Jessica?
It's Jessica, I believe.
Okay, you might want to check on that because her mom's got a bunch of issues, and we were texting back and forth earlier.
Okay.
So you might want to check with her on that.
Okay. I'll double check with her.
Okay.
Okay, you ready?
Yep.
Charts
I am ready.
good.
Excellent. Here we go. Good afternoon, everyone. Today is Tuesday, the first day of July, 2025. Now, if you have not taken a free trial of this, go right here to mytradingiq.com. Click on the purple button right here. All right. There's no credit card, no trading ID. Yes, there is a trading ID. There's no credit card required for the trial. All right. Click on that, and it's going to bring you to this registration page. Just fill out this page, and down at the bottom, hit register. We do want to get your TradingView login ID. We do need this TradingView ID if you want to get the charts. And there's really no point in taking the trial if you're not going to try to get the charts. So click on this. They're having a great sale right now, by the way. If you guys don't know and you haven't done it already, nope, not that one. If you don't know and you haven't done it already, then TradingView right now has got a huge sale on. I'm trying to go find the thing I posted. I posted it in the TIQ videos channel on Telegram. So for right now, the premium is $17.98 a month. You got to pay annually, but it's $17.98 a month. It comes out to $215, and that will cover you for a whole year. Okay. You see, I still have 520 days left because I did this last year. So I still have 520 days left in my current plan. If I do it again, it'll cover me for like, I don't know, that's three and a half years. So that's 2.5 years, sorry. But I just want to point that out, share with you. All right. You all have the opportunity to take that right now. Again, that is in the TIQ.
Easy, good price.
It sure is. It's $383 off of $600. So that is a steal.
$215. Wow.
Yep.
But we still got 520 days left.
Yes, it's 520 days left in this one, and then they do this on the big holidays.
Yeah.
But there's 520 days left in this one. I don't know how much is in the CFRN2 one, but they'll do it again. So
yeah, I have to check.
Yeah, I have to check. I'm gonna check my other one too and see. But anyway, that is how they have that opportunity right now going on with TradingView. If you haven't taken advantage of that, that was a good time too. The registration, yeah, if you click here, that's gonna bring you to this page. Now this has got a little video on it that tells you what to do, and then you click on this, and that may or may not bring up the sale thing. Yeah, this doesn't bring up the sale thing. So you're gonna have to go straight out to tradingview.com to get the sale deal. All right. Let me get that link for you. Let me get that link. I had to open up a separate browser to do that. So let me just do that, and I'll go to tradingview.com. Oops. I didn't mean that. Oh, am I logged in? Yeah, I'm logged in. Let me log out. Okay. And on this one, I'll go to tradingview.com. Tradingview.com. Just this. Okay. And it's not offering the deal right now. But anyway, there's a way to get that deal. Then you go to super charts. See what that brings us. Nope. Anyway, I'll figure out that link and I'll send it to you guys. I'll put it out in that channel again. Okay, once I figure out the link. For some reason it's not letting me do it in here. But anyway, do that. Take the trial there. You're gonna have to pay for real-time data. The real-time data is $7 a month. That price is staying the same. All right. So we're going to the results. We didn't have a bunch of trades today. We had a little bit of a profit today. We were down on the NQ, minus 28 on the NQ, plus 12 on the Russell, plus 13 on gold, and plus 11 on the ES. So we're at 187.50 on the day. Today it took 3 minutes and one trade to get to $1,600. That is with 10 contracts on it. It took a total of 15 trades. So on the month, first day of the month, we're up $187.50. On the year, we're now at 155,652 over 110 days, averaging $1,415 per contract for 2-hour trading day. Following the 24/20 blueprint, let me just make sure that this makes sense. Yeah, okay. Following the 24/20 blueprint, so far this year, you would have only had to work 13.33 hours. And if you added one contract for every $2,000 that you earned, you would be up to at least 7 contracts right now. And we're just going 1 per month, so that puts 7 today. if you did everything just like I did, you'd be up $63,427 on the year, averaging $4,757. So that's $63,427 for 13.33 hours of trading. Now, that does not mean that you can sit down for 13.33 hours and make $63,000. This is what it took over the days, the minutes that it took. Like last month, it took 87 minutes. In 18 days, I traded for 87 minutes. So I don't even know what that is. 87 divided by 18. So I averaged 4.8 minutes per day getting my goal last month. Look at all these ones that I got it on the first day. The first trade, though, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 out of 18 last month. I got it on the first trade. And so far this month, we're 1 for 1. Again, go to mytradingiq.com to take the trial. Okay. All right. So we'll get into the trades. We didn't have a bunch of them, so we'll just get into what we'll do, and then we'll hopefully be able to pop a couple more off here. On the gold, let's get back to the very beginning here on the gold. Here it is, right here. All right, our first trade on gold was right here. We picked up 2 ticks, then we had a break even. Then we picked up 2 more, that got us to 4. Then we picked up 8, 9, that got us to 13. And then we didn't trade again. And that was it. So just looking through here. Now I'm being really conservative right now. I want to just throw something down here for you guys, and I was looking earlier at in here, and our best day of the year was in April. It was April 11th was our best day of the year. We're up $4,177 per contract. All right. Now the markets have slowed down. That was in April. That was after the tariffs were announced, and the markets were kind of wild and crazy. And I mean, there were days where I didn't even trade the NQ because it was just too wild. You can see I filled in with doesn't look like I filled in with anything there, but I know I started trading the YM a little bit in there somewhere. Got 1 crude trade. I thought I started trading the YM. Maybe not. Anyway, and then last month, we didn't have any days over 1,300, over 1,400, I'll say. Oh yeah, we did. We had 1,500, but we didn't have any days over 1,500. We didn't have any $2,000 days or anything like that. It is summertime. The markets are slowing down. The volatility is starting to slow down. Okay, so we were able to take advantage of the volatility as much as we could then, and now it's just getting a little slower. So I say all this to say this. So all that to say this. I was doing a lot of aggressive trading back then. And with the aggressive trading, I was saying, if the blue led into the overbought, you just sell the open of the next bar. If the blue leads into the oversold like this, you just buy the open of the next bar. If it leads into the oversold like this, you buy the open of the next bar. If it leads into the overbought like this, you sell the open of the next bar. All right, buy the open of the next bar, sell the open of the next bar, buy the open of the next bar. That's what I was doing back then. Now I've gotten conservative because the markets have gotten conservative. So I've introduced a way for you to see the markets. It's not anything different. It's just a way for you to see good places to trade in the markets when they develop. Okay, that's what this black line is. It's not a moving average or anything like that. It's just the midpoint between the high and low, the previous high and low when it came out of the overbought or oversold down here. Okay, that's all that it is. It's just identifying the midpoint for you between the swing highs and swing lows. I just wanted to point that out because I got an email that that said I'm constantly changing and I'm constantly doing this and I'm constantly doing that, and that's okay. There's nothing wrong with anybody saying that or recognizing that because it's true. I'm always going to be evolving because I'm always going to try to make things better. And they're saying, well, last year, about a year ago, we had the ribbon with all like 5 different kind of arrows and stuff like that. And I don't use any of the arrows anymore. I don't use the ribbon anymore. But that stuff is still good. So if that's what you learned on and that's what you know how to do, then stick with that. If you're making money with it, keep making money with it. All right, ignore everything else that I'm showing you and just keep making money with it. I'm just showing you things that I do to improve my trading. And I thought I was drawing in all the retracement stuff. That is stuff that I normally see. I don't have to draw anything, and I normally would just see it, and I'd be able to take a trade. I'd say, this is a good trade to take, and I'd be able to take a trade. But not everybody sees that, right? Not everybody can look at this and say, well, you know what, this retracement right here is 50% of this leg down right here. I know the midpoint didn't catch up with that right there because it went on the retracement, it went down 100%, through 100% of the retracement right here. So the midpoint get calculated based on that stuff. But I know that this is the leg length and this is 100% retracement. And I also know that you're above the YBR, so you wouldn't take a short right there, but you could take a short right there at the top of that bar. But so what I did is I created a way for you guys to see, and you got to watch my charts to see why I make the decisions I make, when I make the decisions I make to enter the trades that I do enter. Okay, and so I just wanted to point that out. Oh, thanks, Tim. Tim put up the link here for that. Oops, I didn't copy your email address. I meant to copy the text. Hang on. Tim put up the link for that trading view thing. Let me just copy it and stick it in a fresh browser. And let me put it in this browser. Here. Oh, I didn't mean to do that. Let's do this. Paste it right here. All right, that's not giving me the sale right now. Yeah, see, the old price is $67.95, and right now they're selling it for $17.98. So this is saved 17%. This is looking at something else. It's got some kind of cookie that is looking at on my computer, Tim, under this ID anyway. But I was able to bring it up this morning. But I just wanted to point that out. I mean, the stuff, when it gets choppy like this, if you want to resort back to this kind of trading, when the markets are flat and choppy like this stuff works great. It works great. This is made for the chop. This is made for the chop. And if we get back into constantly choppy markets like this, I'm going to go back to this. All right. And in that case, you don't have to pay that much attention to the midpoint and all that. All right. But if the markets continue to be like this, then we just switch back to this and we'll just make money doing it this way, because this is where the chop is good. All right. I just want to point that out. There's a reason that I switched between things and do things differently. Like right here, we got a leg length right here. That's a good size leg length. That is a good one to look for a trend trade. Leg length here, trend trade. Leg length here, trend trade. But over here, you could do the aggressive stuff. You could, there's different ways of doing the aggressive stuff, but you could do the super aggressive way right here. The three different, if you go here to, you go here and you go to trade rules, there's three different ways to be aggressive down here, right? One is this one. That's the most aggressive. No YBR, must have divergence between the blue and the black, right? Number two is just using the aggressive with the YBR in the direction of the YBR, but only buying or selling as it goes into the overbought or into the oversold. And three is waiting for the conservative trade where it comes out of the YBR with the direction. It comes out of the overbought or oversold with the direction of the YBR. Okay. Just wanted to point that out. So anytime it gets choppy like this, that was one of the questions. John F., are you in here right now? Because he had asked me that earlier. Stephen S., I sent you an email last night too. John F. is not in here. John H. is in here. I haven't seen you in a while, it seems like. Robert C., you're in here. All right. I want to point that out. Now, I think I covered just the gold as far as trades go, right? And so on gold, we ended up with plus 13. On the Russell, did I cover the Russell? We ended up with plus 12 on the Russell. We had just two trades. Wow, there was a lot of movement. I was saying this morning, I thought there was going to be a lot of movement when the U.S. markets closed, but we had two trades, one for a plus 7 and one for a plus 5. That one there and that one there on the Russell. Okay. Good. And I'm curious, did we make new all-time highs yet? How close did we get to that? Nope, we didn't. Yesterday's still the high we got to beat. This green line up here is the all-time high. I was thinking by the end of the week, if that bill passes, we should be there by the end of the week. All right, so that was the Russell. We had two trades in the Russell. Now the ES, we only had a few trades on the ES. 1 plus 6 1 plus 4 and 1 plus 1. And that was all that we had on the ES. Okay. All right. So the NQ is the next one. On the NQ, this is where we got the goal for today. On the very first trade on the NQ, we picked up 32 ticks there, and then we picked up whatever we needed to get up to 90 there. Or I'm sorry, was it 90? 80. No, it wasn't 40. That's why we did 40. We picked up 32, and then we picked up 8 more to get us to 40, and then we stopped out. And that put us at minus 20. That's what it was. Okay, and then we got back to plus 16 on that. Then I made a mistake on this one. I went long, and I shouldn't have gone long. It never got anything that it needed right there, and I went long on that. And it stopped me out and put me at minus 44. And then I picked up a little bit more profit right here, put me at minus 28. And that was it. That was all that I did, but look at the movement that we had here at 11:30. 11:30. From here. I guess it wasn't that much. It dropped first before it went up. Looks like there were some pretty good opportunities in here. Coming out of the oversold from the midpoint a couple of times right there. Some good opportunities on the NQ. And that was all that I did today, right? We only had 15 trades, so it wasn't a ton. So again, if you have not taken a free trial with us, go here to mytradingiq.com, scroll down to right here, the purple button, click on that, no credit card required, bring it to the registration page just to fill it out. Okay. All right, so what else do we have today? Oh my goodness, what is that? Today, this afternoon, that one. All right, that's not really a market mover, so that's not a big deal. And then on Wednesday, we have tomorrow, we have ADP employment change. That's our high impact one in the pre-market. And then gas stocks. And then the stuff on Thursday is actually Friday and Thursday stuff mixed together. All right, because normally they would have, on Friday, they would have the unemployment rate and the non-farm payrolls. That's normally Friday stuff. But they're putting them together on Thursday now. So Thursday's going to be a big day, pre-market. All right. That is it. So with that, over here on the NQ, we haven't hit the ribbon yet. We haven't gotten into the ribbon. We haven't hit the midpoint yet. We haven't gotten into the oversold either. Okay. So that's what we're looking for. Tim, I wonder if I open up this browser, if I open up a new one of these and I paste that in there. That would bring it up there. Nope. No good. All right, so we don't have any trades just yet, all right? But if we were doing super aggressive stuff, we could have just shorted the open of that bar and been up some pretty good money right there. Okay. All right, breaking news. U.S. Senate passes Trump's sweeping tax cut spending bill and sends it back to the House. So the Senate has passed it and it's going back to the House to get them to pass the changes that the Senate made. That's a big deal. That's probably why we had this move up here. Be good for us. You know, we just need volatility. Volatility is what we make money in. And all right, so I am looking over here. We're still in the oversold right here. We need to pull back up to get out of the oversold. If we come out right now, it'll bring it up to about right here. And then the next bar The next bar could hit the midpoint and then give you a down close off of that. You're not going to have much room to move on that if it does happen. Okay. And I need to, what is, you know what, I got it on my phone. What was I looking for? Oh, one more. Okay. I was looking to see where RP was on the day. It's down a little. All right, so over here right now on the NQ and up close right now on the NQ would be a trade, right? So look for that. 12 points from the bottom. There it is right there. There it is right there. Okay. Now this is kind of weak the way it's coming together right here. So if you want to wait for it to, I guess right here, pull back a little bit before you take the trade, that'd be reasonable. But this is the pullback right here. This is about the pullback point. I'd put your stop down here, well below the midpoint. Okay. Here it is. So we'll wait and see. See what happens with this. We are down on the NQ right now. We're at minus 28 ticks on the NQ. So this number, when it's at 20, this number is 50. So 28. You get us back to break even. When it gets up, when this number gets up to 50, I'm going to hit break even on it. Okay. It shouldn't have any problem getting up to 50 because it should get up here. And even if it doesn't get all the way up there, it should get to right here to 38, which would be up here. And that will get us to break even. There it is. Just hit 50, stop to break even. Now the first initial resistance is going to be right here where it's at right now. So I'm going to lock in a point, and then it should go all the way up here to 44.5. Okay. So I'm going to lock in some more right now. I'm in it 30.75, and I'm going to lock in 8 points. Oops, that's not 8 points right there. So that's 32 ticks. So I'm up on the day on the NQ right now. And we're at the swing high. So I want to trail it a little closer, and I don't have to, it's going to take me out. When we get to the swing high, where we're at right now, that's the second place it was going to find resistance. And we're at it now. So I am looking a little bit more. One more point. So now 36 ticks. And we're out with the 36. Right? That was a pretty easy trade for everybody to see and do and take. Easy stuff right there. Right? Over here on gold, you have the same thing, but in the opposite direction right now. If you get a down close on this, that would be a decent short. You don't even have to wait for the down close. Really, you could have done an aggressive trade right here. You could have done an aggressive trade on that and jumped in anytime on that pullback because it met the requirement for the aggressive trade. So my stop's going to go to break even on the gold. No, it didn't fill me on the gold. Darn it. I thought I got filled on that. Okay, well, it's too late now. I thought I got filled on that. Filled on that. Oh, well. The Russell is at a point where you could take a trade. Again, the same thing that just happened with the gold you do on the Russell. It was at a point where you could do the aggressive trade right here, so you can jump in anytime, or you can wait for the up close. Okay, if you want to do sort of a partial aggressive trade. And there it is, and here it is, and stops going to break even, and stops going to +5. Okay, so the gold would have worked out if I would have gotten filled. The gold would have worked out to some profit. I was going to lock in 5 ticks on it, but I didn't get filled. So this one here, I can now lock in while we're at plus 10. We were at plus 10. Now we're at plus 10. Okay, we're at the swing high. So right now it's spot. If it's going to pull back, it's perfect spot for it to do it. So we got 10 there. We got 36 on the NQ. We got 10 on the Russell. We would have gotten 5 on the gold, but we didn't take a gold trade. And this is all so easy, isn't it? I mean, I know it looks easy. It really is. I mean, there's nothing complicated about this. Wait for the easy and obvious trades. They happen again and again and again. This was one right here. All right. All right, so if I go all the way up here, nothing going on. All right. That was the short that I didn't get filled on. Took some profit there. The ES is in the oversold right here. This is kind of one of those ones you could take aggressively because it was right there at the midpoint when it went into the oversold. You can still take it right now on a pullback on an aggressive trade, but it doesn't look like it's going to go anywhere right now. All the indices are starting to slow down, it looks like. It meets the requirements. If you get it up close, you meet the requirements for a conservative trade too. Right, if you want to wait for that, that conservative trade is going to be at 53. Okay. If you want to wait for that, if that happens, then it should make it up to the prior swing high. Now the problem with that is you got 53 up to 55.50. It's 10 ticks up to the prior swing high, and your stop is going to be 10 ticks. So doing the partial aggressive trade, this is what you really want to do. Okay, and there's 4. And now 55.50 is all I really expect out of this right here. The high of the day is right there. It's got a number here at 56. 56 is going to try to get up to. It's got more of them lined up all the way up beyond the high of the day. So we'll see what happens with this. Okay. We're at the midpoint right now where it's got a chance of pulling back. Okay, so we got 8 ticks on that. 8 ticks on that. And nothing here. The Russell doesn't have anything. This is all wrong. And the gold, if I'd gotten filled on gold, we'd have made money on every one of these markets. But alas, I did not. All right. Wow, it's 129 already. Okay. And is Jimmy in here? I sent him the link for that meeting. Ron K, do you want to meet at all? Stephen S, I sent you an email. You got the goal? Excellent, Les. I got your email about meetings this week. I did see that. It's a short week this week. So we can't do anything tomorrow, but we might be able to get something in on Thursday. Okay. All right. This right here on the Russell, well, it's 1:30. I'm going to wrap it up. All right, so let me go here one more time. If you haven't taken a free trial, let's go here to mytradingIQ.com. Click on the purple button. No credit card required for the trial. It's going to bring you to this registration page. Just fill it out. And once you do that, you have your indicators indicating, and you should have charts that look just like mine. All right. That is going to be it. I'm going to pass it back out to fabulous Phoenix, Arizona, in the studio way overlooking South Mountain, America's largest city park. Dwayne, if you are ready, and there you are.
Yes, sir. All righty. Recap of the morning session.
Today it took 3 minutes and 1 trade to get to $1,600.
Good job.
Thank you. Thank you very much.
Okay. I'll get through. I'll be done so that you can have the room.
Okay, I'll start right up at 2.
Yeah,
so,
I'll be done before then.
Okay.
All right.
Great. Thanks.
Okay. Talk to you soon. All right.
Yep.
All right, guys. We had gotten through all the markets except gold and silver. This is the window we drew yesterday live on the broadcast. Okay. Now, this is Tuesday. This is Monday. This is Friday. So we went all the way back to Friday to find a spot for a long window of opportunity. We got it. We also had another long window of opportunity. We got it. Never got the short. And then this morning I drew at about 5:30 a.m. going all the way back in the last week. And that window filled. Okay. This was the open last night. We ran up, we hit the weekly zone, which we expect to be resistance till proven otherwise. We finally made it through the zone, pulled back to the zone, it became support. What was once resistance became support. And then we ran right up to fill that window I drew this morning at about 5:40 a.m. Eastern. We're below the BBC, we got red and falling overhead. So good chance we're going to come back down. Now the top of that long target could become potential support. If we trade through, we've got a short window of opportunity right here. Remember, you only need a $1 move in price to get your goal for the day when you're trading gold. And silver. Okay. These are the windows I drew this morning. Here's where we opened last night, right at the weekly zone. Ran up into blue and climbing. When blue and climbing gets directly above price, it becomes resistance because it's usually on its way to becoming red and falling. So that sent us down to the short target. And then we traded all the way down to this low from yesterday, filling the short window of opportunity from yesterday. So then we got back above the zone. Pull back to the BBC, the pullback held. That sent us up. We got a retracement. We went from zone all the way back to the zone below. And then we filled the short window that I drew this morning. And now we have filled, that was the long window I drew this morning, and this was the short window I drew this morning. And all these windows that I drew this morning, between like 5:30 and 6 a.m. Eastern. They're all archived in the Telegram discussion group, and they all have a timestamp on them, so you can study them. I'm hoping that, as opposed to just throwing numbers out at you, by actually showing you what a window of opportunity looks like, I'm hoping the visual is going to help a lot of people. So we'll see. And we already covered the ES for those of you that tuned in late. The Dow, the Russell, boom, boom, fill both windows. In Q, we fill the short window that I drew this morning, and then we fill the short window that I drew yesterday. Then we found support at the zone, and now we've bounced back up to the zone. Support will always send the market looking for resistance. Now if we just consolidate sideways, the BBC is going to drop to meet price. Crude, we filled a long window. Now that was based off yesterday's price action, but I drew it this morning. We filled it, and we filled it again. So silver, I think we just covered, yeah. fill the long window, fill the short window. And if you miss the beginning of the broadcast, about 30 minutes to an hour after I sign off, you can go to youtube.com/CFRN and watch today's broadcast in its entirety. We have over 2,800 daily episodes archived for your educational and viewing pleasure. You're never going to watch them all. You don't need to watch them all, but it's a great resource to have at your fingertips. I'll let you know we've been around a while. And thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Okay? But again, you don't need to try to watch them all. But again, it's something nice to have at your fingertips. We're celebrating our 20th year anniversary. youtube.com/CFRN. CFRN launched in the spring of 2005. So we're 20 years old now. How about that? If you're ready to become a member, go to mytradingiq.com, watch the videos, read the content, and once you make up your mind, send an email to support@cfrn.net. In the email, say, I want to become a member. If you're a veteran, say, I'm a veteran and I want to become a member. Valerie will reply to your email. She'll give you all the information on what it means to become a member or a passport holder. And if you are a veteran, she's going to include a link in that email. And if you are a veteran, to show you that we appreciate your service, you get a little discount. Okay. Now, you're going to get 2 hours of live training every trading day. This is an interactive environment, live trades in real time with real money, with an explanation of every trade taken, and you see the results right before your eyes. You are listening, learning, asking every question that pops into your head, and trading along in your demo account so you can qualify to go live. Along with 2 hours of group training every trading day, you get private one-on-one mentoring at your request. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's simply how markets work. You get the concierge trade alerts the second they're published every evening. Monday mornings at 6:15 a.m. Eastern, you get the weekly trading zones. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And every Thursday afternoon, you'll get an invitation to join us for the members-only workshop Thursday night at 8 p.m. Eastern. And you get the golden key that opens all the private channels in Telegram. One of the channels is the weekly workshop channel. So if you ever miss the weekly workshop because you're busy doing something else, you can always go back and watch it later. And in that channel, there's hundreds of weekly workshops. So no, you don't need to watch them all, but you can scroll through, and if something piques your interest, because there's a little caption under most of the videos that tells what we talked about during that workshop. And so if you see something that, oh, I need to know more about that, you can watch that video at your leisure. It's everything a trader needs, all under one roof, one low price. It's a good deal, man. I checked. Let's wrap it up with a good word for today. To love, you must forgive. Forgive one another, if any of you has a grievance against someone. Colossians 3:13. It's impossible to love anyone fully and at the same time resent someone else. You cannot give total love when your heart is divided. And a bitter heart is a divided heart. You may be thinking, my spouse is a wonderful person, but I just can't love him. Look beneath the surface. You may still be reacting to your past and harboring resentment against someone who hurt you. That keeps you from loving your spouse, and it's not fair to them. Many people have justified cause for their anger. The Australian Institute of Health and Welfare states that 1 out of every 4 women and 1 out of every 14 men experience abuse during their lifetime. But you must let go of the past to get on with the present. To begin loving people, you must close the door on the past. And that cannot happen without forgiveness. So forgive those who have hurt you for your own sake, not because they deserve it. This is to set you free. Do it so your heart can be whole again. The people from your past cannot hurt you unless you allow them to hurt you by holding resentment against them. See, when you've got a beef or a grudge or whatever with somebody else, they don't feel any pain from that, but you do. So forgiving them, it doesn't set them free, it sets you free. No matter what they did, no matter how horrendous it may have been, once you truly forgive them, you are set free from that experience, whatever it was. Anytime you resent someone, you give them a piece of your heart, a piece of your attention, and they get free rent in your mind. Do you want that person to have that? No. Then take it back by forgiving. Instead of rehearsing the hurt over and over and over, release it. And you can't be selective in what you forgive. I will forgive that, but I won't forgive this. The Bible says in Colossians 3:13, bear with each other and forgive one another if any of you has a grievance against someone. Forgive them as the Lord forgave you. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.